Hi, I'm Tim Sustak, Chief Credit Officer with Vizo Financial, and this is your FOMC update for the June 2019 meeting. The Fed chose to leave rates unchanged at its June meeting, which was widely expected. The markets were hoping to get a clear sign that rate cuts are on their way. Generally, that seems to be how the statement following the June meeting is being interpreted. The statement had some changes that everyone is focused on. Concerning the economy, the committee indicated that overall economic activity rose at a moderate rate since the May meeting, which is a bit of a downgrade from the solid description of the prior statement. As in May, the statement indicated that the labor market remains strong and that inflation is running below the committee's 2% goal. The change being focused on the most is the removal of the word patient when talking about future rate adjustments. The June statement says that the committee will closely monitor the implications of incoming information for the economic outlook and will act as appropriate to sustain the expansion. The markets were looking for this change and are reading this as a signal that the Fed is ready to cut rates. The committee did reiterate that they believe the most likely path for the economy is one of sustained expansion, strong labor market conditions, and inflation near the committee's symmetric 2% objective. However, they also acknowledged that uncertainties about the outlook have increased. The June meeting also gave us another set of projections from the Fed, and the dot plot shifted a bit. Based on the median estimate of rates, the Fed does not expect a decrease until 2020. However, a look at the individual dots shows that the Fed is split about in half as to whether rates will remain the same for the remainder of 2019 or decrease by 50 basis points. This is also something the markets are focusing on as an indicator that rate cuts are close. What does Chairman Powell have to say about all this? A look at his post-meeting press conference after the break.
Your employees are more than just people who work at your credit union. They are advice givers, solution seekers, and unwavering advocates for your members. It's only fitting that we be their advocate too. With iCare through Vizo Financial and our partner, Interlutions, your credit union can offer better employee health care for less. Gain access to more providers, build custom plans, and minimize your costs through cooperative buying. These people are the face of your credit union. Make sure they're always smiling with iCare.
Welcome back. In his press conference following the meeting, Chairman Powell gave the markets what they were looking for to support the notion that rate cuts are on the table. He indicated that the committee felt that dropping the notion of being patient and conveying a message that they were ready to act was warranted based on increased uncertainties about the economic outlook. He said that the crosswinds they had been watching for some time in the form of trade tensions and declining global growth have seemed to reemerge since the May meeting, when the committee felt there was evidence the crosswinds were moderating. Further, he indicated that risk sentiment in the financial markets has deteriorated and inflation remains muted. Because of these factors, the chairman indicated that many participants now feel that the case for somewhat more accommodative monetary policy is strengthened. Further, he indicated that a number of those participants who are still projecting a flat rate path moving forward agree that the case for additional accommodation has strengthened since the May meeting. He tempered this a bit by reminding us that it's important for monetary policy to not overreact to any data point or short-term swing in sentiment, so the committee will be evaluating whether the aforementioned uncertainties will continue to weigh on their outlook for the economy. So, while the FOMC did not telegraph a rate decrease for any particular point in time, it certainly left the door open for future decreases, with some saying their recent language all but guarantees it. The markets seemed to think that the Fed indicated cuts were coming. The day before the meeting, the markets were predicting about an 82% chance of a cut at the July meeting and a 98% chance before the end of 2019. After the meeting, a 100% chance of a cut starting in July. There are many competing forces tugging at the Fed regarding rates, and I think we have to listen to the Fed and wait to see how the scene plays out before we believe anything is 100%. That's the update for the June FOMC meeting. Thanks for watching.